Thank you for staying with us. Before we went on the break, we told you that some banks like Access, Fidelity, First City Monument Bank, Zenith, and Guarantee Trust Bank are now raising funds to achieve its strategic goals and build better structure in the financial sector. Talking about the recapitalization process put forward by the governor of the CBN. And here we have joining us via Zoom, the CEO, Center for the Promotion of Private Enterprise, Dr. Muda Yusuf, to talk to us about this. Good morning, Dr. Yusuf. Thank you for joining us.
Good morning. Thanks for having me.
Right. Now, there are those who have expressed concern about if the Nigeria Exchange is able to support these banks in the recapitalization process, if they are able to raise funds, the kind of support and the structure that is necessary for this money is expected to be raised by the banks. And so the question is, how well positioned is the Nigeria Exchange to support the banks in raising these funds?
Well, I have no doubt that the Nigerian Exchange has the capacity to support the banks in raising the capital. I have gone through this part before. That was close to 20 years ago. And between then and now, I'm sure the capacity of the exchange had even improved significantly. The level of their technology application has improved. The level of their sophistication has improved. So I don't see any issue at all about the capacity of the Nigerian Exchange to be able to raise, to be able to support the banks in this recapitalization. What we may be worrying about is whether the banks will be able to raise that kind of money, given the state of the economy. I think that is the bigger issue. But as far as capacity is concerned, I don't think there's an issue with that.
And so from what you have said, looking at the state of the economy, can these banks raise this humongous amount?
Well, it is possible because we have quite a number of people with deep pockets who are also seeking for opportunities to invest. And investing in many other sectors now can be very risky. Like investing in manufacturing, agriculture, and many other areas. So we have some group of investors who are more comfortable investing in shares. And the good thing about the sector stock is that this is one of the best stocks you can find. In terms of profits, in terms of returns on investment, I think the banking sector still remains one of the most profitable so far. Even though many sectors have issues, the issues that the banks have is not as much as what many other sectors have. If you look at the records of the profitability posted generally across sectors, you will see that the banking sector seems to be returning a much better profit performance than many other sectors. So if you come from that angle, it's possible that they're able to also raise the funds. And in any case, there are options. Okay. It's not compulsory that all of them must raise the capital. They have the options of mergers and acquisition. They have the options of also going for a lower grade of banking license. So there are options.
Yeah, that's the concern for many people, because this is coming just after the closure of Heritage Bank. And many people are concerned. If you go to the street, you hear people concerned about the strength and viability of these banks as it is. And you are mentioning that banking is profitable. But on the streets, that's not the mindset. So how strong are these banks as it is right now?
No, you see, what happened to Heritage Bank did not start actually today.
Okay.
And I think it's a question of, the quality of corporate governance, the quality of risk management, and possibly some level of shortcomings with respect to the regulatory oversight, both by the CBN and the NDIC, because that bank has shown signs of distress for a couple of years. But for some reason, they kept patching it until what we had. But on the whole, I think the banking system is generally very, very profitable. And you can see the evidence, even in terms of the results they are posting and in terms of even their shares. And if you look at the structure of the economy generally, the banking sector is not as vulnerable as many other sectors of the economy. So generally, I think they are in a good position. But the point to make here is that there are options. That is one. Secondly, the timeline is good enough. I mean, we are talking about 24 months. So they have the time to be able to decide whatever they want to do moving forward and to comply with this new recapitalization requirement.
All right, perhaps let's look at how some of these banks are approaching this matter, and some have called it the bold steps they are taking, especially the ones that are making offers. There are those who have gone for public offer, and some other persons are saying the others that went for rights issue. But from your perspective, talk to us about how these banks are approaching this whole matter, especially the key 4 or 5 banks that we mentioned earlier.
Well, every bank has its own strategy of dealing with this matter. But the options open to them for capital raising are very obvious. They have the rights issues, they have the public offers which they can use, and quite a number of them have shareholders who have very deep pockets who can expand their portfolio within the banks. I'm talking of offering the right issues. And I will not be surprised if for some of them we even have an oversubscription. And secondly, they have the opportunity of also even attracting investors from abroad. Because at this time, even the exchange rate, the weakness of our own currency, it is very easy now to get foreign investors to invest in some of these banks. Because with, for instance, coming with maybe $1 million, you know what that means? That's over $1 billion, over about 1.5, 1.6 billion naira. So there are the options of raising capital from outside the shores, raising capital from our diaspora community, and also raising capital internally. Because as challenging as the Nigerian economy is, we still have people who have lots of money to invest. The challenge with the economy is that the income may not be properly distributed, but you have quite a number of people who have the money to undertake this investment. So in terms of their strategy, I think all of them are on course. And of course, they have laid out various options before them. And just as I said, they have 24 months, although maybe 6 months already gone. They have enough time to be able to navigate this and meet the requirements. But what is important is for the CBN to ensure that you don't have situations where depositors lose their money again. Mm-hmm. You don't have situations where any bank will go completely under. Those things are very, very important in order to retain the confidence of the banking sector, the banking community, the depositors, the citizens in the banking sector. That is extremely very important.
So how should the CBN address that?
No, well, first of all, the CBN has to be consistent in its messaging to the banking community, to the citizens, that being the apex regulatory institution, they will ensure that in this process, no bank goes under, and that the depositors, no depositor will lose his or her money, whether corporate or individual. Then secondly is for the CBN and the SEC to manage the process in such a way that we don't see any major disruption, within the banking system. So the regulatory authorities, SEC and CBN, needs to be on top of this. They know what to do to ensure that we ensure that stability within the banking system, because that confidence is very critical. Because the banking sector, the banking system, the banking activities is dependent entirely on confidence. If the confidence begins to collapse, the banking system may collapse. So retaining the confidence, preserving the confidence of the citizens in the banks is extremely very important. And I'm sure the both SEC, that's Securities and Exchange Commission, and the central bank, they know what.
Mr. Yusuf, you are sounding really optimistic that the banks will achieve this target. But in case they don't, what next for them? And what will be the impact of this on the banking system, especially as you have mentioned that they can also apply for a lower tier license? What do you think will be the impact of all of this if they don't achieve this process?
No, I'm optimistic that there should not be any major issue, given the fact that there are options. Option one is that they should raise the capital. They can raise it within their shareholders. They can raise it with public offers. They can raise it getting foreign investors. That is one option. The second option is that if you don't have the capacity to raise the capital, you can merge. So you have options of mergers. You have options of acquisition. Bigger banks can acquire the smaller ones. And if you don't want to merge, you have the option of downgrading your license. If you are a national bank, you can go down to being a regional bank. So if you look at all these options, any serious bank, any serious management or owners of banks should be able to settle for one of these options. Okay. So the options are there. It's not as challenging as what we had in 2005 under Soludo, where all of them were put in the same bucket, and where we had almost a stampede, where banks had to move from 2 billion capitalization to 25 billion. That created a lot of chaos. And many banks went under, many depositors lost money, a lot of employees lost their jobs. This is not likely to happen this time around. First, with the time frame. Second, with the options that are available. So I don't have any much fears.
Okay, looking at what you have just mentioned, the last recapitalization happened in 2005 with 89 banks, and it was reduced to 24 banks with the mergers and acquisition and all of that. But between then and now, how resilient has our banking sector been over time?
They have been resilient. They have been very resilient until we had this Heritage Bank issue. For a very long time, no bank went under. Even though the central bank, especially under MFLA, for banks that were sick, there were structures, to take them over, to ensure that depositors don't lose their money. So that is how we came about what they call the bridge banks. Polaris, I think, Keystone, and I think quite a number of them got some support from the central bank to ensure that they remain afloat. AMCON also plays some role in that. So for a long time, we didn't have any issue with banks going under because of the intervention of the bank. And if you look at all the financial stability ratios of the banks, capital adequacy, non-performing loan ratios, all those ratios are looking they are not looking bad at all. They are not looking bad. I mean, these are ratios that you use to determine the soundness of the financial system. So for many of the banks, those ratios are also still very good. So I think our banks have been generally resilient, and where there are weaknesses, the regulatory agencies were able to come in to manage those challenges so that no bank went under over the last 1 decade until we had this incidence of a Heritage Bank.
All right. Let's perhaps take a closer look at the pricing put forward by some of these major banks as it is. Market watchers, some are saying it's as if some aren't really thought out or properly thought out. The offer's been made to the public. What say you to that?
Well, they must have assessed their worth in the market. And I think ultimately it is the market that will determine if the share prices are overvalued or undervalued. It is the market that will determine. So we need to wait and see how the market will respond to the offers that have been made available. It takes people who are in the industry or stockbrokers or all of that to be able, but at the end of the day, it is the buyers of those shares, the market, that will determine whether some of those prices or some of those shares have been overvalued or whether the values that they are placed on them are realistic. It is the market ultimately that will determine.
But from your perception, how realistic are the pricing that you have seen?
Well, given the status and given the profile of many of the banks, I think those prices are realistic. Given their profitability track record, especially the leading ones that have blazed the trail in this capital region. I mean, they are realistic given where they are now, and given the place of the banking sector within the economy generally. Because when you do a sectoral comparison of the health of sectors or the profitability of sectors, the banking sector is still one of the best performing relatively. So given that option, and given the fact that we have an economy where many other sectors are so very weak, and many investors are wary of going to investing in some of these sectors, the banking sector offers a great opportunity for many people, especially those with deep pockets, to be able to invest. But one thing about the economy is that, yes, you have a lot of poverty, but again, on the extreme, you have a lot of very rich people because there is very high level of inequality. So for those segments of the economy that have deep pockets, I'm sure they will subscribe to this share.
So what about if I hear you correctly, this does not provide the opportunity for those who do not have deep pockets. Where does that leave them?
No, where people are struggling to feed, how many people have savings to even go and invest these days? I'm not talking specifically about the fire. The opportunities are there for everybody. I'm talking about capacity to invest, to buy the shares. When you have a situation where the level of poverty is at what it is now, how many people have that kind of savings to go and be buying shares or to even invest? When people are struggling with day-to-day living, that is the context in which I'm talking about, that the level of poverty is so high that not many people even have the savings to go and buy these things. But the reality is that we are dealing with an economy where the level of inequality is extremely very high. We have extremely rich people. We have so many poor people. So for this kind of shares, I mean, it is people at the upper end, of the economy that will buy most of the shares. That is the way it is. I mean, look at even the banking structure. Go and look at the deposits. How many people have deposits of up to 500,000 or savings up to 500,000? Majority of people have, almost 90% of people who have bank accounts have less than that. So that is the point I was relating to. It's not as if the shares are not meant for the poor people. They are meant, but again, where is the capacity? So that is the issue I was relating to. But it's open to everybody. But the bulk of the people that will buy these shares are people who have some fairly deep pockets.
All right. So in all of this now, like we said earlier, the last recapitalization was in 2005. And so how was, looking at then and now, and this new recapitalization, how has it impacted on lending to SMEs and individuals in the past? And how will this new process help SMEs, help lending to SMEs and individuals or businesses?
Well, the last recapitalization, first, just as I said, it was more or less like a stampede. And it was one-size-fits-all kind of approach, which was not very good for the process. There was no categorization. All the banks were compelled to go and look for 25 billion. And I remember at that time, even the directors of banks were appealing to the then president of Obasanjo to at least to give them some time. But the then president refused for whatever reason. So many investors in the banking system lost their investment, unfortunately. But the process this time around is better. As for the impact of this on lending, the more the capital, the higher the capacity of the banks to lend, particularly to fund big projects. But lending to small businesses has traditionally been a very big issue in this economy. Because for SMEs, the banks perceive SMEs as high-risk segments of the economy. So the credit risk to SMEs is extremely very high. So that is why, in most cases, close to 70% of the credit, even 80%, goes to medium to large enterprises. The SMEs' access to credit is still extremely very low because of the perception of risk of SMEs and because of also the fact that the cost of administering credit at those levels are very high, and because of the risk of loan default, and because the fact that many small businesses can't meet the credit requirements, the kind of collateral requirements that the banks require. So there are so many constraints to lending to the SMEs. And for some sectors that are critical for growth, the risk of lending to them is even higher. If you take a sector like agriculture, if you take a sector like manufacturing, because of all the challenges in the economy, the risk of default in some of these sectors are extremely very high. So that is why we have been having challenges with lending to SMEs. Even though they contribute significantly to job creation, they contribute, over 50% to job creation. They are very good. They play a big role in promoting development of the economy. But in terms of access to credit, the challenge is still very much there.
All right. We'll have to leave the conversation here now. But we must thank you, CEO, Center for the Promotion of Private Enterprise, Dr. Muda Yusuf, for your time on the program. Thank you.
Thank you.
All right, we'll take a break now. When we return, we'll bring you the news update.